So good morning, active traders, and welcome to our live Trading Week Ahead broadcast. We're on air coming at you live here from Colorado. Happy New Year's, and I hope that y'all are doing well in your trades. That's despite the global pandemic and so forth. The one silver lining in the world is the United States stock market skyrocketing despite the pandemic. So there's a bright sunny spot out there somewhere in the world, and it's the stock market, right? Of all the things that are going south, the one thing that we can count on is U.S. equities. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold. We don't make any profitability claims. Consult with a registered investment advisor before trading, yada, yada, yada. I was watching Seinfeld. You may have seen me at Traders Expos. Our biggest winner of the week was ACY, but we're going to cover that in a little while. Let's go ahead and get back to it and start off by taking a look at our stock market. The S&P's been in a continuous uptrend and it's taking out new highs. Now we may well get we've got a Santa Claus rally yesterday, right? The market spiked up right into the close. The last 20 minutes or so, it'd been kind of sideways. Most of the upside volatility in the market this year has been overnight. And so we've seen a lot of overnight gaps and relatively sideways in market ranges. So that does well for swing traders. It really means you need to be a little more selective in what you trade for intraday trades, for day trades. So we have a lot of great charts to look at today. We're going to get underway. Now, with the S&P continuing an uptrend, I would use just the even 3,700 as S1 and 3,600, which is the 50 simple moving average line, is support level 2. And now a lot of the institutional guys are using this peak at 3,550 as S1. But I'd push that up a little bit given the recent price action in the market. The pin action, knocking it out of the park. We want to trail stops on open swing trades if the S&P gets under 3,700 to scale out of open existing swing trades or long-term position trades you may be in. On the other hand, we want to go back into the market if we get north of 3,770. So I'm using 3,770 as a key resistance level. That's where I'm going to start getting back into the equities, looking at the strongest sectors. They're using 3,700 as support. Speaking of strong sectors, one thing that I encourage you to do is keep an eye on the sector charts. We have, for example, weakness in biotechs. All week long, they were selling biotechs last week. Do you see that? Here's a quick candlestick quiz chart question. What's the bearish pattern at the top that you observe in this? Anybody? What's a bearish reversal pattern? This is the biotech sector chart. So buy all things biotech. It sold off all week last week, nothing but red candles, despite the market going up. Looking for those disconnects between individual industry groups. You know, what are they selling? The big money players, what are they buying? You know, they've been buying metals lately, right? They've been buying solars, they've been buying electric vehicles, all in anticipation of the new administration coming in. They've been buying pot stocks, right? So we got strength in some sectors. They've been buying tech, but they've been selling this. Right, William, Damon, Pete, Kartik, Dave. Yeah, it's a bearish engulfing. So we've got a bearish engulfing up here. So that's a bearish engulfing pattern. Okay, so that means that we don't want to buy, at least I'm not going to be buying biotechs next week. What are they buying? One good example is semiconductors kind of going sideways. We don't have relative strength in that yet. What they are buying though are things like electric vehicle. They've been buying oil. USO, the oil ETF, has been trending up a little bit here lately, but we've got much better strength in tech and electric vehicles and all things green. So for example, some of the top swing trading charts, I've been covering this for your plug. This one's been running nicely from 12 to 36. And we'll go through the rest of these in a minute. But my first point is, when you're looking at the stock market, you've got to break it down into its component parts. And just very easily, very quickly, just snap through some of the sector charts. So that's one thing that, if you're struggling with your trades and you take more stops than losses, more stop losses than wins, welcome to the club. We've all been there, done that. The more important thing is, how do you get paid? And what are some of the winning opportunities out there? The first clue is to drill down into sector industry groups, all right? So get it. Well, are they buying oil? Are they buying gold? Are they buying silver? Are they buying semis? Are we in value versus growth? And really kind of segment the market into industry groups very quickly by scanning through some of the thumbnail charts. Then you drill down into the hot charts of the week. So let's get on with it. Plug looks great. Baidu looks even better. That's my #1 pick of the week, by the way, is Baidu, if it takes out a new high. Where would you guys go long? Let's make this an audience interaction portion. The game show host, play the new stock market game. Where would you buy Baidu? Now, a lot of you may want to short it, and I get it because it had been 140, now it's 220. It's up $80 in a month, which is huge. But just ask anyone who tried to short Tesla how that worked out. Bum, 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 epic fail. So you don't want to short strong instruments. You want to buy them at new highs, but you got to do it correctly. Where would you go long Baidu? By the way, China's probably a safe bet. They're eating our lunch. So China Internet's doing pretty good, right? Baidu, swang, flawless victory. Going from 140 to 220. This is the type of chart that you want to swing trade because not only is it got a large range, but it's got a consistent breakout. Now there's a red candle day yesterday, so obviously we wouldn't want to buy under, say, 225. But where'd you guys go long? Let's see, 2 1/4, 231, 230.50, buy above 225.50. Hey, William, Damon, Kevin, Lou, Glenn, Dave, 226.30, 210. Anything up above the high makes sense. What I'm a big advocate of, and what I urge you to test, one of the tip #1, make sure that you use things like whole and even whole numbers and multiples of 10 for these expensive instruments to look for triggers. So when I eyeball this chart, I say, first of all, there's an uncertain zone right above the false breakout area is right above the current high. So I would be suspicious of it right here under 230. So right here is a false breakout zone. That's where longs may start to nibble away at it, and then immediately the market makers gun for the stops and they sit on the ask and the thing crashes back down to 210. So I would wait till somewhere over 230. So that's tip #1. When you're looking at expensive charts, and I prefer charts down at $10, $20 a share, like a lot of us do, but for great charts like this with multiples of 10, where they're trading things like Baidu or Tesla or Apple or Amazon or Netflix or whatnot, use those multiples of 10 to give you a technical ledge to climb up out of the muck. Where are we going to go long? Somewhere over 230. The first thing you want to do is figure out, is the chart worth trading? That's absolutely freaking worth trading. They've been buying this thing up the yin yang, right? Good thing for a China stock, right? 140 to 2 1/4. So we do want to continue up. Maybe it goes to 400. Maybe it does a Tesla, right? Maybe it does an Amazon. Or maybe it does a crash and epic drop back down here. The first thing is figure out, is it worth trading? Is the trend and the strength of the trend strong enough to justify putting your hard-earned capital into it to go for a breakout? That's step #1. Is it worth trading in the first place? Kind of like, is a restaurant worth going to? Is it a good restaurant or not? Or hiring a person to do a work for you? Like I hire a lot of people to do work for a lot of contractors to work for my company. Are they worth working with in the first place? That's the first decision where a lot of traders screw it up and make a mistake of over trading choppy charts. Instead, we want strong directional volatility. So that's step #1. Step #2 is, where is the false breakout region? Where's the fake out? Where are you going to get stopped out? We all deal with false breakouts. That's an occupational hazard. You want to minimize that by saying, here's kind of like the iffy area right above the high, where the, I guess the kind of a negative phrase though is the dumb money. I've been the dumb money. I'm sure we all have been the dumb money at some point. Hey, it's breaking the new highs. Let's get right in. And immediately crashes and burns. And you go, dope. I hate when that happens. And then a day or two later, boom, it's 260 a share. And you say, wow, I could have made so much money if I'd just given it more wiggle room. That's not the right answer. The right answer is have the false breakout region identified. So remember I said we'd want to wait till over 230, like 230.5 or so would be my specific figure, not a trade recommendation. I short under the 210 in a heartbeat. I'd short 209, but I'd go long over 230.5, and I'd dodge a bullet by not going in right at the new high. Let's take a look at some new charts. Let's get on with it. We're going to cover day trading charts in just a minute as well. MGM's been on a slow grind up. Now this guy, I'm fine going in over 32.5, like 32.50, 32.60. on a breakout in MGM stock because it's in a continuous uptrend and it hasn't pulled back or shown any sign of weakness. It's been continuously bought up from 23, earlier 20 bucks a share, now it's over $30 a share. Maybe it'll go up to $40 a share. MGM and DraftKings are my two favorite gaming stocks, MGM and DKNG. Other blue chip stocks, obviously things like Apple, despite a pullback. So given what I just taught you about the multiple of 10, where I used to teach college classes back in the day, for private universities back in the 90s, back before I got into day trading, where would you go long in Apple? You don't want to take a bite out of Apple. Ooh, oh, that didn't taste good. So you don't want to go in right here. At least I'm not going to buy it here. I bought it on the way up. I sold it back. Fortunately, I think it was during that green candle day back on Tuesday. So it might have been Wednesday. I sold my Apple midweek last week. I will definitely get back in at a new high. Where would you wait for it to get above before going long to potentially avoid a false breakout in Apple? Anybody have a bright, shiny idea? Where is Apple a good candidate for a breakout trigger? Let me know your thoughts. I'm all ears. A little bit of mouth, but mostly all ears. I want to listen to what you have to say. Okay, 144, 140-ish, 140.5, 140.5, 145, right. Right, you guys got it right. Trey, Dave, Kartik, Damon, Chris, somewhere north of 140. Now, it doesn't really matter where. I mean, you could go long at 140.5, which is where I would go in, because I like to give it at least a half a point above a whole number, just to make sure there's some strength there, but somewhere over 140, like somewhere over the rainbow. But unlike the Wizard of Oz, we don't want to get in trouble by going in too soon. So somewhere over 140 makes sense. We don't want to fool around with it in here, and we don't want to fool around with it right here. By the way, this illustrates perfectly a concept that I published in Stocks and Commodities magazine a long time ago, which I highly recommend you guys. You guys are all subscribed to traders.com, right? As technical analysis of stocks and commodities. My Trading on Momentum column has been really popular, voted #1 by the Reader's Choice Awards a year ago, back in 2019. Thou shalt never buy nines. Anything with a 9 in it is a sell target. Sell, sell, sell. Takes them off the top, baby. If you're up, you never buy a 9. You sell the 9s. So that's why I would never buy, say, 139. And I just noticed that right now. It illustrates the concept that I teach of selling 9s into whole number breakouts. So you don't buy a 9, you sell something with a 9 in it. Instead, you wait for it to get north of the decade value. And let's look at a chart the kind that I prefer to trade. It's a little cheap for my taste. I prefer things that are around 12, 15, 20 bucks a share. But SM is in Sierra Madre, or in Sierra Mike. Anyway, this one's been a spectacular swing trading chart because unlike most cheap charts like ACY or BTBT or UUU, which are great for day trading, but for swing trading, you want charts that are consistent. As for any swing trading, you want steady uptrends, preferably a 45-degree angle breakout. We had a bearish engulfing here, so we don't want to touch it in this region. 640 would be the first place to nibble away at it. But the long trigger I'm going to use in this is I'm going to buy something over 740. This is SM. Now, I don't even know what the name of the company is, and I don't really care. I just care about making money. So I trade strength in charts, but this has been under significant buying accumulation pressure since early November. I had a bullish engulfing right here. That's called a bullish engulfing, following a downtrend. Whole row body wraps around the previous red. Barely a bullish engulfing, but it is a bullish engulfing. A Western confirmation, by the way, for pivot. Here's a good trade setup, combining the best of the East and the West. If you see a hammer, it's hammer time. Da, ba, ba, da. No, just kidding. You see a hammer or you see a bullish engulfing or a tweezer bottom, buying above that's the first place to put on a pilot trade or a small share trade. That's what I do. And then I'll scale in if it breaks above, say, the 50 SMA, which is the red line. On a down chart, you're looking for pivots, and frequently you'll find a good setup. But the confirmation, the bullish confirmation, is a recovery of the 50 simple moving average line. So that would have been great at $1.80, $2 a share. It tripled in money up to $6 a share plus. So a nice run in SM. Another one that would be death to shorts would be Tesla, right? I still think it'd be a great epic short if it drops, say, somewhere under 600. but it's up at 700 a share. So Tesla's crushed its shorts this year, and it continues to race to new highs. So somewhere north of 720. On this particular chart, yeah, it still hit somewhere north of 720. It's a good breakout trigger. Now, another China type play is copper miner Freeport-McMoRan, FCX. I've traded this one before, and you can see on the 3-month, it's got really good directional strength. It looks even better. We take a little step back to the 6-month chart. Right, that is the single best swing trading chart I can find for us all in the markets. And I've been alerting my live trading room members, the Trading Open members, to Freeport for a swing trade for weeks now. And it's been a really successful runner. It's doubled in value. It's gone from 12, 13 a share up to 26. So it's doubled in value. And again, what I like is the breakout consistency, right? Now here's a quick question. Let's say we buy somewhere over 27. Where would you put your trailing stop? And there's no right or wrong answers. There's no, no egos here. We're all a bunch of traders and we're trying to figure out how to make as much money as possible. My goal is to help you be more effective in your trades by giving you a disciplined thinking, rules-based trading process that hopefully is very clear, very concise, very easy to understand, and most of all, easy to implement, something that you don't need to think twice about. And eyeballing this chart, if I go long and say 27.30, 27.40, if I buy 27, where would you put a trailing stop or an initial hard stop? Who wants to answer? Let me know. On a really big turnout today. Wow, thanks everyone for being here. Hey, thanks Jim, Trey, Dame, GB. We got 27, 26, 25.85, 25, recent swing low. All good answers. Yeah, I would use somewhere in the 24 to 25 region. The reason I say that is a lot of traders may use moving average lines the wrong way and say, well, you got to give to the moving. I hear this a lot. People say, we got to give it down to 22. Au contraire, I think that if you buy 27 or so, I would stop out. I use usually a $2 stop loss as my go-to strategy for stocks under 40 bucks. Well, between 20 and $40 a share, I use usually a $2 trailing stop. So if I buy 27.30, the nearest whole number would be 25. So I would stop out somewhere between 24 and 25, not way down here and certainly not lower. I've got a lot of new traders here too, a lot of folks from around the world as well. One of the things that you want to do is be very clear on price action trading and be very clear on the reasons for an entry. As my colleague Steve Nissen would say, there's a price that proves a trade wrong. That always echoes through the back of my mind every single trade I put on. What's the price that proves a trade wrong? What's the price that proves the trade right? Now, if you get out too soon, it may, let's say you buy 27.20 and it pulls back down to 26.5. Do you go out? No, because it may well skyrocket back up after a brief, 50-cent pullback. So you don't want to get out too soon. Neither do you want to wait for it to get down to 19 or 20 because that's too big. There's kind of a sweet spot in the middle there where you want to balance your entry and you want to balance where you trail your exit for a trailing stop value. But that's my bright, shiny ideas for the week. We've got a few minutes left here. Let me give you, let's switch over to day trades, right? I love day trading, so let's look at some recent charts. BT was a good runner for our live room members yesterday. This is the kind of chart I love to day trade because it's got a big range. And this one came from one of my smart members. This was not my pick. I've got so many traders. Many of them have better picks than I do. So that's one of the benefits of joining my live trading room at trademastery.com/live, or you can type in still tradingopen.com and it'll forward over there. But look at the range on this guy, 13 to 24. Now, what are the patterns? Pattern recognition skills. Name this pattern. Bright, shiny, Johnny, tell them what they won, the trading game show of the year. What's this chart pattern that would tell you to go long above the neckline on the right side? What's that pattern? And that's where we started to spot it for the live room members. That's a good pattern recognition skill. And especially if you're day trading, you've got to identify things. Professional intraday trading is so much more than simplistically looking at things like bull flag breakouts on low flow charts that are running. There's a lot more intelligence and a lot more profit potential in charts with bigger ranges than the $2 and $3 stocks. And this guy has this, I think it's a Bitcoin play like Riot, right? Anyway, this one's a new instrument to me, but I nailed the call out of the park for our members yesterday. But who can tell me that pattern? Yeah, Chris has an inverse head and shoulders. Question from Dave, do I base risk reward on percentage to account for 2% max? No, that's an ancient strategy for investors. Like it was good back in 1971. Hey, 1971 called and they want their 2% rule back. You got to play it much, much tighter than that if you're going to make it as a trader. I would never give up 2% of my account for any stop loss. That would be grievously, horribly big. I'm the master of tiny stops. For intraday trades, usually, and I got a call from or an email from a trader Paresh this morning. For a lot of these things, we use as tight as 40 cents or maybe $1 or so at the most. For swing trades, it's usually $2 for things under 40 bucks a share and over 20. For things that are down in the $5, $10, $15 share, we may use no more than $1 as a stop. So really tight stops. But yeah, good points. Yeah, Jimmy's saying a megaphone. Yeah, you could call it that. Inverse head and shoulders. Frenchie, hey, Frenchie. Hey, good to hear you from Frenchie. Yes, it is inverse head and shoulders. You are correct. Head and shoulders. Right, Trey, you got it, man. You're right, William, head and shoulders. Like Peter said, there's so many bear traps these days. That's right. Chris is asking longs on UVXY. I bought some yesterday because it failed to drop despite even though it was at a 2-day low, it didn't show a lot of weakness. 1020 is a 52-week low on UVXY. I trade it daily. The S-Dow was the weakest of the inverses. LabD, the biotech inverse, was the strongest. And I'll cover that in just a minute, but that's a smart question. I bought some I bought UVXY yesterday, but I'm going to use 980 as the support. That I'll stop out of UVXY 9.8. We'll cover that in a minute, but smart question. The inverses are all now at 52-week lows, so maybe a good time to start picking some up if they take out 2-day highs, like LabD did, right? It's up almost 7 percentage points. And we'll cover that in a minute. Anyway, a breakout above a head and shoulders high combined with a whole number strategy is something that I like to teach in the live room. You know, if you're looking for plays, really always want to pay attention. Always eyeball the whole numbers because those act as rungs in a ladder, right? Or resistance if you're climbing down. You've got whole number support and resistance frequently, right? So that's something to pay careful attention to. You can see 20 was whole number resistance, 24 was whole number resistance, and this guy skyrocketed up for us. Now, speaking of whole numbers, one strategy that I illustrated for my live room members earlier in the week was ACY. I bought it at 640. Did any of you else trade ACY? I think Tuesday was the big day, if memory serves. Let's look at this guy. That's BTBT. That would have been great for a swing trade too, right? An epic run. But the one that I wanted to look at for the next chart is ACY, Alpha Charlie Yankee. You can see it was back on the 28th. I called it long and I traded it long starting at 640. Now, I did not trade it all the way up to 38. I don't know if anyone was fortunate enough to do that. I was, and I sold way the heck too soon because I thought the resistance would be near 10. So I got out way too early, but hey, such is life. I was not patient enough to wait through the halts and sell up in the high 20s or 30s, but ACY, really good opportunity for day traders, but you would not want to swing trade this because what if you bought at 30 or something? Wow, now it's down at 10. So good for day trading, not good for swing trading. UUU is also another one of those cheap one-hit wonders that ran up nicely back on the 29th, and it ran from 7 to 14. But that's a kind of a shakeout chart. That one's tough to trade because of the ups and downs. So I prefer a little more consistency to my charts. BTBT was a rock star, right? So one thing that I urge you to do is experiment with different time intervals and different trading strategies. One thing that you may want to start doing, which I like to do, is trade. Like my colleague Tom Sosnoff says, trade small, trade often, and that's the correct way to trade. You don't trade big thousands of shares at once, because then you take big expensive stop losses, and then you blow up your trading account, and you're out of the game, and boohoo, no more trading for you. And so, if you're in a position of where you have to explain or justify your trading losses to your family members or spouse, you're probably not doing it right. So let's make a New Year's resolution and make sure that you trade the strongest charts, and make sure that you've got a replacement set of habits that can help you become potentially more effective, right? Now let's wrap up with a quick coaching. Well, that's ACY was our biggest winner of the week. And I just updated the live room page this morning, and we got more updates to come. So that was one of the 6.4 is the long trigger for ACY that my members got before it ran up. That was the biggest winner of the week, was that ACY chart that spiked up to 38. Now I thought it was kind of toppy at 10 or 12. I didn't think it would, and that was a double, right? It ran from 6 to 12. I didn't think it'd go to 38. So we didn't get the last big run, but we still got a really good initial breakout in ACY for you. My live room, we get live classes 5 times a week. I'm not going to read all this stuff, but the main point is you can join now. And if you've never tried it, the live room, really worth trying. You can get 3 whole weeks for just $7. And by the way, I do not do upsells into these BS overpriced $2,000 or $3,000 courses or any of that kind of foolishness. I'm honest, and I give you great training for your money. You can get, I still have the annual on sale. I did do a 6-month, and thanks again to all of you who registered. A really big turnout. A lot of you registered for the special I just did, which was 6 months for $500 or $497. You can still get the annual at $997 if you want, and that's at trademastery.com/live. So really good opportunities to figure things out. And again, a quick kind of trading mindset slide here. It's helpful for the new year to figure out, and like Tony Robbins would say, you want to change in an instant or make some transformations. I want you to figure out what can serve you best in your own personal trading approach in terms of changes you want to make. Hit me up with your best New Year's resolution, more of or less of, and we'll wrap up with that in today's session. Maybe actions to change, beliefs to challenge, confidence that you build based on success, decisions that help you win, effective ways to evaluate progress in terms of your lessons learned in your P&L. Basically, I want to ask you to give some thought to, if you had a good year, great, how can you make a good thing better next year? Or if you had a bad year last year, just a so-so year, how can you improve and hopefully make better winning trades more often? One of the best things to start doing is look at the difference between charts that are actually worth trading versus everything else out there. Right, my top swing trading chart that I can see so far, that one would be dangerous to swing trade, at least for any length of time, in my humble opinion. Great for day trading though, right? But something that's a little more consistent, like Freeport-McMoran, has spectacular P&L potential because it doubled from 13 to 26. Maybe 27 is the top. Maybe that's the high of the year and it's not going to go any further. But if it breaks on through, it may be good for 30 and beyond. So charts like this are ones that I urge you to give some thought to swing trading. Not necessarily this individual chart, but charts that look a little something like this that have consistency. Because of all the tens of thousands of traders I've worked with since 1999, that's one of the most frequently complaints that people have about their own trades is they want to build consistency and effectiveness and be more successful. It all starts, with the end in mind, and it starts like a good, what I call honest charts that don't have a lot of pullbacks or treacherous reversals or questionable patterns or things that make you lose sleep at night. You want charts that you can sleep peacefully at night with, and frequently those are nice 45-degree angle continuous breakouts that run up week after week and can really potentially help you become more effective as a trader. So New Year's resolutions, I'd really appreciate if you would let me know, and I'll read those off and we'll wrap up here in just a minute. Oh, and any questions too, let me know if there's any questions, Q&A. I'm reading this off little tiny print on one of my many monitors here. So you want to make Monday, how about triple U, stay focused, a more consistent trader? Let's see, how do I know when an island reversal happens? Just a loss of a 2-day support. I'm a big, huge advocate of 2-day support and 2-day resistance. If you break under a 2-day low, I start to scale out of a trade for swings. If we break above a 2-day high, those are the kind of charts for day and swing trades. So I scale in at 2-day highs, I scale out at 2-day lows, and I hold steady if the chart is trading within the previous day's trading range. And I'm very good at that now. I'm very effective at making decisions based on the simple 2-day chart. Let's see. Oh, wow, a lot of comments. Thanks. Adam saying, in the event of swinging the stock that drops below the stop loss overnight, how would you react in such a scenario? Good question from Adam. What if you're long and it gaps against you? What do you do? I will usually wait until at least 940 or so to see what happens. I'm always following my charts pre-market, and if they gap against me and they make a bear cup and or downtrend and they keep going down, I'll go ahead and stop out. But if it just kind of holds steady, which it often does, I'm not going to get out of the trade. And frequently you'll find that they do a little shake and then they recover in market. This has been a mean reverting market where the extremes tend to pivot back inside the previous range. So really good question from Adam. And so the correct answer, at least that I found, is that's kept me long and strong in charts that have done minor gaps down, but then recover in market. So I don't like chicken out of the trade at the first sign of a gap. I wait to see the trade mature. And if it does continue to sell off, I'll go ahead and holler uncle and stop out, rebuy if it recovers the gap high in market. But usually it's best to wait till at least 940 or 945 to see what the price action is, the pin action, the first few minutes of the session. Because again, this is a market that often gaps and pulls back down, or gaps down and bounces, or gaps and just kind of goes sideways like we've seen so often in the S&P. That's a smart question, thanks. See, Fiona's asking, is spread betting good with your stocks? No, spread betting is good for nobody. Spread betting is horrible. I would never do that. Never, ever, ever, ever in a million years would I spread bet. That's a horrible thing. That's like contract for difference, CFD trading. Never, ever, ever do that. Not only is it against the SEC regulations, but it's horrible. That's gambling and doesn't work. So like binary options, another thing in the don't trade it because it's a horrible odds thing to do. We want to just trade the underlying that's strong. And again, you don't need to, the great thing about my approach is I advocate trading small size. You know, there's an old saying on Wall Street, there's old traders, which I'm 50, I'll be 57 in 2 weeks. I'm getting old. But anyway, there's old traders, there's bold traders, but there's never old, bold traders. You don't want to be like these gunslinger kids out there, 25 years old, say, or 30 years old or whatever, saying they're day trading thousands of shares at once with hotkeys and in and out. And only they seem to be making a fortune. Everyone else loses their shirt. That's because it doesn't work, and they're bullshitter. Pardon my French. They are not completely honest and forthcoming young men. What I advocate is a much more conservative, small size. There's nothing wrong with trading 5 or 10 shares of something like a Tesla or an Apple or Netflix or whatever. There's nothing wrong with trading 20 or 30 shares of something like this, as long as you scale in when you have the house's money to play with. You know, if you've got unrealized P&L in the green, I'll use a martingale approach. You know, I was in several dozen positions a couple of weeks ago, and what you want to do is scale into the ones that keep going up and scale out of the ones that go down, but use very small initial size. That way you minimize the cost of a stop, and that also helps fix that gap problem, because I don't know about y'all, but I don't like to be in a stock that 300 shares and it gaps, you know, 2 points against me. That's a $600 loss, and to me that's completely unacceptable. I like my initial stops to always be under 100 bucks or so. So I trade really small, but I trade really often, several thousand trades a year. So that's a good answer. Let's see, question. What's the name of the article in the tech and stocks and commodities? Something like don't buy nines on that, or the 2-day high-low pattern. Just go to traders.com, traders.com, and type in my name, Ken Calhoun, and you'll see the list of dozens of articles, including this month's article. Chris is saying I'm a year young, and Chris is saying I spoke French. C'est la vie. I used to have a French girlfriend, but I digress. Anyway, it's je ne sais quoi. Voulez-vous coucher avec moi? Don't let me get started on the French. Got lots of friends up in Canada, eh? And But the point is, trade smart, trade small, trade often, figure these things out, and let's make it a great year together. So on behalf of all of us here at Trade Mastery, that's me, I wanted to welcome you, and hopefully we'll be able to work together. So my deal, you can get the live room. If you're brand new and you've never trialed it before, you can get a few weeks with me for just $7. Or if you've tried it before and you want a great deal, you can get, and again, there's no upsells into other like $2,000 courses or any of that foolishness. You can get a whole year with me. That's over 30 hours a month. I'm there usually 8:45 to at least 10:45. Our official hours are 9 to 10:30, 5 days a week. And we're covering now a lot more on swing trades, as well as the days big runners for intraday trades. So you can go to trademastery.com/live, or you can type in tradingtheopen.com still. It'll forward over here. And you can join the annual membership for just $9.97. And if you never tried me, do the trial. It's only $7. And you can do it with PayPal or Visa or MasterCard. So you guys have been great to work with. And I sincerely hope that you have a successful year. Whether or not you work with me or whoever you work with, I hope that you trade smart and you figure out the best chart patterns. And I'd certainly be willing to help you if you join my live room by answering questions. By the way, unlike a lot of other places, you can ask about charts of your choice, and traders do every single morning. I'll say, hey, Ken, what about this chart? And we'll pull it up together, and I'll give you straight answers to whether I think it's worth trading, and if so, where would I enter it, and where would the initial stop loss and the target be? So you can bring charts of your choice for both day and swing trades to the live room. And it's a great value. I used to charge, $9.97 for a 2-day seminar with me. Here you get me 5 days a week. If you can take it, 5 days a week, a good high energy, professionally moderated room without all the shenanigans and front running and all the kind of foolishness you may have seen from other people out there. So by the way, never trade low volume instruments. If you're day trading, make sure it's got at least 15 or 20,000 shares per minute, because you don't want to get front run and you want to focus on charts that have big ranges with tight stops and also small initial share size. That's another thing that differentiates me. I completely disagree with people that are out there saying you should hotkey in thousands of shares at once. That's called gambling. That's called video game day trading. And you don't see those people be effective, or at least nobody else except the person purporting to do that can be effective. I think it's much better to trade up to 100 or 200 shares at a time, maximum. Play it tight, play it safe, and join me in my live room. Any other questions? Oh, thanks, Nick. Hey, Dave. Hey, Trey. Hey, Will. Yeah, you guys, thanks. Saying thank you, great info. Yeah, and look forward to these, and, if you want to get to know me and without signing up for anything, that's fine too. No big hard sales push. You can join me for my free Saturday events all year long and get to know me and test out my ideas. How many of you agree with me that I think you should test out the validity of an educator's approach in their free content before you consider buying their paid content? Whenever I ask Money Show attendees at my packed room, standing room only Money Show appearances back in the day, all hands would go up, and I completely agree with that. So these Saturday events provide you with a really good opportunity to see my chart picks, my professional trading approach, and see if it's a good match for you, a good fit. So I'm not a good fit for everybody, just a smart people, a good fit for most people that are keen to learn new strategies and replace bad habits with effective habits. Replace low performance setups with higher performance, higher probability chart patterns. But most of all, it's all about trade management and managing your risk. And I'm all about tight risk, very small. If you're wrong, make it be a very inexpensive experience. And if you're right, hopefully it's slightly better, and you can hopefully do well with it to try and turn the corner in your trade. So I wanted to wish all of you the very best for a successful and a happy and a peaceful 2021. Despite all the turmoil, and it's been a really tough year for the world, despite all the doom and gloom out there in the broad world, the silver lining is the US stock market rallying to all-time new highs here despite the pandemic. It's like the market saying, nah, the world can go to hell in a handbasket, but the stock market continues. We continue to be strong here at Trade Mastery. So thanks for being here. Good, no BS approach. I'm honest. I like to teach you my lessons learned, and hopefully it can be a core part of your own trading approach as well. So it's an honor, and I appreciate y'all for being here. Sincerely, I know, because there's other things you could be doing with your time on a Saturday. You could be watching TV and drinking coffee or doing something with the family. So thank you for your time, and I hope that you'll consider joining my live room at trademastery.com/live. And I updated the site this morning too, so it looks better. So great, everyone. All right, Adam saying, yeah, test, collect data, evaluate, take action, repeat. Exactly. We used to call that kind of like a, what was it, a Durand circle or something like that, a continuous improvement loop. You test things out, you evaluate effectiveness, you make some changes, and then you retest, and you continuously try and grind away until you improve your strategy. I used to be a quality management consultant, so we always do that with process improvement teams is, what's something you could do a little bit differently that can produce much better outcomes, and test and experiment until you get it. So hopefully I can be a part of that. So thank you for being here. I think that's about wrap. Well, thanks, Nick, asking what advantage am I not updating to the, I still use the old version of eSignal because I can pack more data on the screen than I can with the new version. But yeah, you're right, I should try the new version. I've been using this version of eSignal for the last 2 decades. There's a saying here in Colorado, beware the man that only has one gun, right? So I'm like the guy with one gun. I know how to use this platform, and I've been using it for since the dawn of time, it seems. So I don't want to change things up. Why? If it's not broke, don't fix it. But yeah, there's always updated versions of software out there. So good stuff. Hey, Trey, thanks, man. Appreciate it. Hey, you too, Nick. Thanks. Happy New Year 2021. You too, Nick, saying may it give you peace, health, and prosperity throughout the year. You too. Genuinely, I want you guys to make it. You know, we're in a very stressful time in our lives, right? I have been stressed beyond belief with all this pandemic fear and all that, because I worry, because something that can do you in is not something to take lightly. So despite that, we've got a silver lining in the US stock market, and equity markets are fantastic to be trading, right? So now's the right time, now's the right place. Go ahead and join now at trademastery.com/live. I'll see you in the live room next week, and take care. See you guys next time. Bye for now.